Good morning, everyone, and thank you very much for joining. This is the morning market review with Russell Shaw, Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and today is Tuesday, the 15th of March, 2022. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments, and then I'll bring up the commentaries, disclaimer, references, and we'll get on with the webinar. So thank you very much for joining this morning. Hey Zanetta, good morning to you. Nice to have you on the webinar as always, and thank you to everyone that's signed in. Very much appreciated. I'm just going to bring up our market commentaries disclaimer. I'll keep this on screen for a few moments. Thank you very much. And just our references, FXCM Market Scope 2.0, we definitely will go through the CNBC morning note. I'm not certain if we'll do trading view this morning, depends which way the conversation goes. But what I'll do is just bring up the charts. Before we get into the charts themselves, let's take a look at the headlines and see what it is that we need to be aware of. So this is coming from cnbc.com. It's the European markets morning note, and its headline reads, European markets set for lower open as Ukraine-Russia war weighs on sentiment. European stocks are expected to open lower on Tuesday as global sentiment is hit by Russia's ongoing invasion of Ukraine. Global markets continue to be buffeted by events in Europe as Russia's war on Ukraine continues to wreak death and destruction on the country. Talks between Russian and Ukrainian officials took place on Monday in a bid to establish a solid ceasefire and find room for any compromise between Russia and Ukraine's demands. But like earlier attempts, the fourth round of discussions ended with little progress being made. Talks resume today. The US Federal Reserve is also in focus this week. It's expected to raise its target Fed fund rate by a 1/4 percentage point from 0 to 25 basis points. Investors are also awaiting the central bank's new forecast for rates, inflation, and the economy, given the uncertainty from escalated geopolitical tensions. So we certainly want to see what the dot plots suggest. US stock futures rose slightly on Monday night as investors continue to monitor the developments in the Russia-Ukraine conflict and get ready for a key Federal Reserve policy decision. Elsewhere, shares in China lagged among the Asia-Pacific markets on Tuesday. Though some losses were paired following the release of Chinese economic data that was far above expectations, still China is currently facing its worst COVID-19 outbreak since the height of the pandemic in 2020, with major cities, including Shenzhen, limiting business activity. Earnings from Volkswagen, RWE, H&M today. Data releases include the latest ZEW Economic Sentiment Index from Germany. All right. The chart that you're looking at here, this is the UK oil chart. It's the 4-hour chart. What I want to point out is it looks as if the gap, which kicked off the week last week, so it opened Monday, it gapped open. And the reason it gapped open on Monday was because that was the interview with the Secretary of State Blinken, who suggested that they're going to implement a ban on Russian imports. And you can see it opened with this big gap open. And the idea was, well, is this a runaway and exhaustion gap? We postulate it's probably an exhaustion gap, but we weren't sure. It looks as if at the moment it is tending towards an exhaustion gap. It's closed very quickly. And you can see that the moving averages here. So we've overlaid this with a triple moving average, and we've got the green moving average moving below the intermediate orange moving average, and the orange moving average is below the longer term red moving average. most importantly, the red moving average is turned down. Okay, so we've got the angle, we've got the separation. Oil is now at $100. Okay, this is at $100. Last week we hit a high of 133. So I think by and large, except for anybody that's been trading oil long, this is good news because it means that the stagflationary pressures are in decline. Okay, so the fact that oil has pulled back, and there was a lot of excitement when we kind of gapped up here, and already when you get that kind of exuberance, well, you kind of know that probably the best is behind you, which is what we suggested. Again, we need to keep an eye on this. Any escalations here can certainly bring in some sort of supply shocks. Let's just take a look at some of the other instruments that were affected. So we want to bring in wheat. Let's take a look at wheat. All right, so we'll just let's drop the Kiwi here, and you know what? Let's drop the Swissy as well, and let's bring in wheat and corn, and let's just see what's happening with those charts. So let's take a look at wheat. We know that wheat went limit up 3 days in a row. It also went limit up at least 4 days, but 3 days in a row. It's moderated somewhat. This looks to be more of a potential issue than oil at the moment. The reason I say that is you can see that the moving average here, the green moving average, that's the faster moving average, has crossed above this intermediate orange moving average. So what that's done is it's stopped. So we had a bullish stack, green on top of orange on top of red. That's a bullish stack. That means price moving up. We then drop down. We very briefly get what we call a bearish stack, green below orange, orange below red. However, we don't have that bearish stack anymore. What you have here is you've got we're neutral. So after the initial shock up of wheat, okay, it seems to be moderating now. It's just very interesting. Look where the price is sort of stuck at the moment. So we just want to keep an eye on this chart here. Ultimately, if wheat prices moderate as well, energy prices moderate, then that stagflationary pressures stop moderating. Let's just take a look at corn. Okay. Now this is a beg your pardon. Where's my chart? Disappeared. All right. Here you can see that corn prices shot up. I'll just show you this on a weekly chart. So you can see it shot up. I'm going to go down to the 4 hour. And you can see that the 4 hour is now starting to moderate as well. Green, okay, is now turned down. What we want to see is we want to see the orange drop below red. Okay, so if we can get the soft commodities starting to pull back, and we're getting energy starting to pull back, then that's that stagflationary environment that everybody is concerned about. Well, it's still very much a risk, but the pressure is starting to diminish. Let's bring up gold just to see what's happening with the pullback in the commodity prices. And you can see that gold is actually starting to pull back as well. And for us, gold's an important metric to keep an eye on, because it's really, if we go into a stagflationary environment, well, its store of value becomes incredibly attractive. The fact that it's starting to pull back, just as oil's pulling back, just as the soft commodities are pulling back, maybe telling us that that stagflation environment not as serious because of the initial supply shock. I think it still very much depends on the progress that the Russians and the Ukrainians make at the negotiating table, which is, you know, again, a huge outlier. We don't know which way that's going to go. And if you had to put money on it, you know, peace is certainly would be at long odds, one would think. Let's just hope that we do get a peaceful breakthrough those. Let's just see if we get a peaceful breakthrough in terms of the negotiations. Okay, I'm just taking a look at some of the comments here. All right, so first comment is from Howard. Hey, Howard, morning to you. Okay, these are all these are simple moving averages. Again, I wouldn't get too. It's very important. I wouldn't get too caught up in the periods. So I'm just using a 5, a 13, and a 34. These are not magical numbers by any means. The reason that I'm using 5, 13, 34, they're just Fibonacci numbers. I was just looking for a fast, intermediate, and a longer one. I chose the Fibonacci sequence. That was not through any sort of testing at all. Okay, it was just because I want some sort of indication to test the strength of sentiment. This indicator was used by an Australian trader, a legend in terms of traders in Australia. Her name was Dawn Bolton Smith. I think she used 5, 10, and 15. Okay, so again, don't get too fixated on the periods. There's no magic periods here at all. It just really depends on number one, if you're going to use it as a trading system, well, then you need thorough testing. And we're certainly not using this as a trading system. We're just using this as an analytical system. And then, you know, use one that's sort of you're comfortable with. All right. Pete also said something interesting. US dollar, Japanese yen has gone vertical. Yeah, I did see that. All right, so we've got 2 central bank meetings this week. We've actually got 3. We've got the Fed on tomorrow. We've got the Bank of England on Thursday, which is probably going to raise by 25 basis points. And then on Friday, we're going to have the Bank of Japan, which is going to be dovish. We know that the US dollar is a big one. We know that the Fed is adopting a more hawkish stance. We know that the Bank of Japan is dovish. I think that's one of the factors that we're seeing this sort of movement up here. Pete, let's just get this on a weekly. To me, this is a slightly confusing chart. Let me just bring this in over here. And let's just bring in, say, the Dow. And, you know, I would perhaps have expected, some sort of downwards bias or some sort of sideways bias. That's just sort of what, because Japanese yen tends to be fairly strong in risk-off environments. The fact that the US dollar is outperforming the Japanese yen, I think is a sign. Let me think about this carefully. I think that we've got to consider US dollar, Japanese yen. I think then we've got to consider US dollar with that. Okay, so here's US dollar. And I think we've got to consider gold with that. Okay, so I think gold comes into this mix here as well, which is coming down. In other words, the havens, okay, the havens here don't seem to be getting much traction just over the last 2 weeks. They just don't seem to be getting traction over the last 2 weeks, suggesting again, perhaps, and remember the market's forward looking, perhaps that the market's expecting the stagflation threat to kind of blow over, perhaps expecting some sort of stability to return to the geopolitical situation. Maybe, you know, I'm just kind of reading into the fact that the havens are getting sold off somewhat. So let's see if that is the way things play out. Katie, we did do oil. I'll bring it up very quickly for you. Oil is back at $100. So we did UK oil before. We'll just take a look at US oil. So you can see, so UK oil is at 100. We've got US oil at 97, and the whole question that we have been sort of asking is, are we at a runaway or an exhaustion gap? And by and large, it looks as if it's an exhaustion gap, again, until proven otherwise. But once we've got the overlay, green is below orange, orange is below red, and they're all pointing down. There's that angle and separation, so you can see that the oil market certainly seems to be in corrective mode at the moment. I think the importance hitting $133 on Brent. I think we went to 127 here, 120. Okay, 130 here. Let's say we went to 130 here, off of this gap, and we didn't run away from that. I think that says a lot. The fact that there was a gap up and it closed. I think that the money to be made in oil was, you know, we broke out kind of over here. This is where the war broke out. I think this is where the money was to be made. Okay, and then this was the exhaustion. So the pros made their cash here. It gapped up over here, and they sold out for to take their profit. The last buyer sucked in, and I think that's come down, which is what an exhaustion gap's all about. So this was probably the runaway gap over here. So here's the runaway. Okay, here's the exhaustion, and I think that's the way it's played out, subject to, I guess, the geopolitics and the supply shocks that follow from that. The MAs, these are just, as I told Howard, don't get too fixated on the numbers. I'm using a 5.13.34. Dawn Bolton Smith uses a 5.10.15. There's no periods here that are going to be optimal. You're just going to have to find the ones that work for you. All right, let us take a look. Katie also asking if we can have a quick look at Nasdaq, and we certainly can. So let's bring that up. All right, we'll keep it on the 4-hour, and again, let's just take a look at it in terms of the overlay, and you can clearly see that we've got the green fast, which is our 5, below the intermediate orange, which is our 13, below our long the 4. They all have a downward sloping gradient. That's so Nasdaq is showing weakness here. It's all very interesting because we've got gold coming down, we've got Nasdaq coming down. When we take a look at the US 30, which is our industrials, it's holding out a lot better than Nasdaq. It's holding out up a lot better than the Nasdaq, but it is under pressure. I'll pose the question why, if that is why is Nasdaq performing worse than the Dow? What's your guys' take on that? Let's bring up DAX as well, just to get an idea. All right, so here's the DAX. Okay, the DAX is looking much healthier in terms of the 4 hour, where we've got the green on top of the orange on top of the red. Now let's just bring out the trading view. I said I wasn't sure we're going to use it, but I think in terms of the discussion, the fact that I just want to show you guys something. We have discussed this many times before, but worth repeating. As the Nasdaq getting hammered, here is the Dow. It's weak, but it's not getting hammered. Okay, take a look at it. Nasdaq again, getting hammered. And the question, okay, the question that we ask is, well, why is there such a big underperformance? Why is there such a big underperformance by the Nasdaq? And I'm just going to bring up our. Okay, I'm just bringing up our US 10-year, and this is really the answer of why there is such a big underperformance. It's because of rates. Okay, we won't get into the mathematics today. We have done the mathematics previously, but if you had to do a time value calculation, growth stocks, which is exactly what the Nasdaq is, are much more susceptible to interest rate hikes in terms of having their price under pressure. At the same time, by the way, if interest rates are coming down, it's the Nasdaq, it's the growth side of the market that's going to respond the most positively. The US 30, the Dow Jones, those are established, mature companies. Okay, they pay out regular dividends. Growth companies delay dividends because they're reinvesting, and that aspect of the time value of money means that as soon as interest rates start increasing, well, you start incurring what we call an opportunity cost by holding a company that's not paying out a dividend, right? So that's why they are under pressure. Does that make sense there, KD? I hope I've answered those questions. Let's just go back to the DAX just to have a look at see how the DAX is opened, and then I think we can finish off with a quick look at Bitcoin. Remember, tomorrow we're going to do a full crypto minute session, so we'll do. But let's just let's go through to the weekly. So we'll do a top down with the DAX, and we'll end off with Bitcoin. All right, so the DAX over here still has a lot of work to do. We mentioned on the webinar yesterday that we're looking at last week's chart as an anchor, effectively for a reference candle reversal. And we want price to take out last week's high at the moment, and we've still got 4 days of trade ahead of us. And at the moment, not much has been done in terms of market movement. It's a very short candle relative to the last 3 weeks. You can see how long the last 3 weeks candle ranges are. So the emotion has clammed up somewhat, but in order to get some sort of sign that we've hit a bottom, at least in the interim, we need price to close above last week's high. Even if we get a close above last week's high, we've got to be very cautious that we don't get trapped, in a bull market trap. In a bear market trap. Of the suckers rally, right? So, but at the moment, you can see. Let's zoom in. What do we see in terms of the weekly candle? A doji. It's a doji with a slight bias towards the downside, right? But it's a doji. Bulls have tried to take price up, bears have tried to take price down. Where are we? We're exactly flat. Okay, so we just want to keep an eye on that. If we go through to our daily chart, so I think there is some positivity here. I think there is some positivity here in that we've moved out of zone 3. We're in zone 2. Zone 2 is only a neutral area. To really get the DAX moving, we've got to get into zone 1. That's a bullish area. We've got to get over here. We're not there, but the fact that we've moved out of the weak area I think that is something that we can celebrate, but we don't want to get carried away with that celebration because we've still got 4 days of trade. We really need bulls to really take out last week's high. Let's just go through to the hourly and see what's happening. And this is the problem here, the hourly chart. Let's just clean it up. All right. So you can see right away the moving averages are heading in the wrong direction. Okay, so we've got a bearish crossover here in terms of the moving averages. Take a look where the stochastic is. The stochastic's heading towards that 20 area. We're not in it yet, but if we dip below 20 and hold, well, then we break this S1 support. So let's just put everything together. I'm going to come back to the weekly in a moment. Sorry, to the hourly in a moment. But weekly, doji, small range candle, no real excitement. There is perhaps something to celebrate in terms of the movement out of the weak into the neutral, but we've got to hold that neutral area. If we drop back into the weak area, you know, that's a capitulation. We don't want to see that. In order for the neutral area to hold, in order for the sort of the consolidation to evolve, well, we'll need this S1 level to hold. Okay, so the key level that we're keeping our eye on is S1. So S1 has to hold. It does look like there is an element of support there. You can see in our previous hour that the S1 level did hold. Let's just see if we can get the moving averages to cross bullishly. If they cross bullishly, we want to get the stochastic up to that 80. If we can do that, then we build some sort of positive momentum, which is good to see considering we've moved out of zone 3 and hopefully getting to a point where we can get above last week's high, which is effectively our second condition for the reference candle reversal. All right, let's just go through to Bitcoin now, and there's a comment here about Howard. I'm just going to read it through, and then we'll do an analysis of Bitcoin. So Howard writes, there was talk about Bitcoin coming under pressure due to the Federal Reserve's decision that's due this week. Do you think that Bitcoin will ever be banned altogether? He feels that it won't be. So I don't think it's going to be banned. I mean, never say never, but I think that the issue with Bitcoin and cryptocurrencies is I think that they could come under increasing regulation, and the geopolitical politics perhaps suggests that is coming sooner rather than later, because there was a movement in cryptos when there was an expectation that that was one way the Russians could avoid sanctions. As it turns out, it's not really a loophole, because it just doesn't carry the liquidity that's needed to avoid the sanctions. But I think that there was a fear there that probably has now come under the scrutiny of regulators. Howard's also saying that there is pressure on mining. It uses too much power. Yeah, in fact, to the point that mining, I think, is illegal now in China, right? So a lot of the mining has gone into the US. So I think that is something that the US regulators will be looking at as well. I know that the power usage resulted in mining banned in China. So what does that mean for Bitcoin as an industry? We have looked at this previously. So let me just bring up Microsoft Paint. All right, so the way that industries tend to evolve, is in stages, and you'll see it through, say, the internet, the development of the internet, development of any new industry typically goes through stages as follows. You have the embryonic stage, followed by a growth stage. Then there is a shakeout, goes into sort of maturity, and then kind of goes into decline. So these are your stages. So there's sort of embryonic, growth, shakeout, mature, but this is the theory. What can happen is, let's just say there's some sort of regulation. So clearly, cryptos are past embryonic. It's a question whether they're still growing or they're in their shakeout stage. I would argue perhaps shakeout, maybe. But sorry, I just had to turn myself off. But let's just assume that they're still in the growth phase, or regulation might cause the decline to come in earlier. Okay, so we just got to see if that's the case. Let's take a look at the chart of Bitcoin, and just Howard says yes, correct. There's also talk of the EU passing something regarding that as well. Okay, cool. So let's again just clean this up. There's a lot of markings here that we've done over the months. Let's just get rid of these. And I think that, Howard, the idea here for us is, let's just take a look at the stochastic first. So the stochastic is here is in the 20 area. So you can see that there is a pressure, and this is a weekly chart. So there's a downwards pressure. We've got a 1, 2, 2, 3, 1, 2. So that's your downtrend into a consolidation here, which looks to me as if it's a sort of a pennant continuation. But if it's a pennant continuation, it means it continues. The breakout theoretically is to the same direction as the previous impulse. But take that out, and there's a few other patterns here we've just got to keep our eye on. The first one is head and shoulders, left shoulder, head, and then the question is this the right shoulder? So if it turns out that this is a pennant continuation, then it's probably a right shoulder as well, right? Which then begs the question, is there even a bigger pattern that we need to be aware of? And if there's, and what would that bigger pattern be? What would be the double top? And you can see that, so we're kind of in a very sensitive area here for Bitcoin as a crypto. We'll just take a look at this in terms of the daily. So the day it is in the neutral area. That makes sense because of the sideways continuation pattern. And now we see there is an element of danger coming in here. Bearish cross, and there is the threat of a sustained downwards momentum. All right, so I think that's where we'll leave it for this morning. If there's any questions, please go ahead and type those in. Any questions, just go ahead and type those in. All right, let's wrap up here, and we will speak tomorrow. Thanks very much, guys. Appreciate your time. Sorry, Mo.